My name is Joe DeBrita. I'm a member of the JMRD Watson Wealth Management team, and I'd just like to thank you for joining us for this video here today. As mentioned, we are going to try and shoot a few more videos, so if you'd like to follow us on our YouTube channel, that's probably the easiest way to see what all of our new content will be. So this video is a special one. We're trying to do our quarterly reviews for our portfolios by video. And this quarter, we're going to focus on our all-cap basket for its quarterly and annual performance. But as I mentioned, it's a special video, and I want to be the first one to say that the JMRD Watson team has won the National Award for Private Portfolio Management. We were selected out of 155 portfolios, and our all-cap basket has won. And some of the criteria was based on 1, 3, and 5 year performance. So we're super excited about this, and it's something that we're going to be talking about for a while to come. But today, I'm joined with Zach Davidson and Jaden Ropp, two of our portfolio managers, and we just really want to focus on the all-cap basket, and we're going to tell you everything about it that you maybe wanted to know. And as always, feel free to reach out to any of us with any questions or comments that you might have. So with that, Zach, Jaden, welcome to the call. It's a big topic here, so we'll get right into it. So Jaden, a question for you. Many people are familiar with growth and value investing. The all-cap basket operates on a relative strength mandate. Can you explain this process?
Well, that's a great question to start, Joe. And, we focus on finding the best ideas for our baskets without focusing on whether a company is true value or true growth. Instead, we use a relative strength factor to build our baskets. And relative strength is simply the comparison of price performance within a universe of securities. So analyzing securities by their relative strength, or how they, how strong they are compared to each other, is a way to identify, we think, the leaders from the rest of the pack. And it's these market leaders we feel we want to own long term. Relative strength also allows us to identify the laggards too. And successful investing, we think, requires avoiding those major pitfalls or laggards for an extended period of time, as much as it is buying those winners over the long term. So we're not trying to really find the next beaten down name. You may have heard this phrase, buy high and sell higher. And that's typically the strategy we're using when we make our decisions in the baskets. Why try to own a company that, could be undergoing negative changes or that could last for a while when we could own the market leader? We've found that leaders can outperform for many years, and Zach will get into that a little bit later. But we want to continue owning these market leaders as long as they remain strong.
Great, thanks, Jaden. So another question here for you. Aside from relative strength, are there any parameters that you need to follow when investing in the basket? For example, can you hold Canadian or US stocks? Is there a certain index that we have to follow?
Well, Joe, we'll typically look at market cap size, which is the size of the company essentially, and the liquidity, which means how quickly we can get in and out of a stock. And, generally the larger companies have more liquidity, so we avoid, the micro caps for the most part, or the smallest of the small caps, just because they're hard to trade in and out of. Now, that could mean we're not participating in the early stage growth of some of these companies, but whenever we buy something, we always have an exit strategy in mind. And if we think we're not going to be able to sell something, if, say, a company turns against us or something negative happens with the company, then we typically won't buy that stock, because we all know that if we're trying to sell something under pressure, and under pressure means there really isn't much liquidity for it or any buyers on the other side, then you usually have to settle for lower prices, and we don't necessarily want to be in that situation. The all-cap basket, we buy Canadian stocks. We start by looking at the TSX index, which is the Toronto stock market, which holds the larger companies. Now, they do have small-cap companies as well, which we do look at. We also look at venture exchange companies, which typically are, the smaller companies. But we like to look at venture exchange companies that we think will be graduating towards the TSX at some point in the future.
Interesting. Excellent. Thank you. So Zach, on to you. We've all kind of heard the idea of rules-based management, and it's discussed and tossed around quite often in the industry. Can you tell us a little bit about the rules that we follow and what was done in the basket in March and April of 2021?
Our equity action call, which ranks 7 asset classes based on fund flows, compares their relative ranking to each other and guides us with our overall investment decisions, whether we should be fully invested or should be raising cash. That indicator moved from the neutral to unfavored zone on March 13th. That meant we weren't going to make any new purchases until the risk-reward outlook improved. It also meant raising cash in the portfolios and looking to sell smaller, non-core holdings. When this occurs, our primary focus is to play defense. With the dislocations in the market during that period of time, we waited patiently for some strength and then sold a few holdings in the basket that were acting the weakest. This strategy was done to lower the portfolio volatility and provide us with a cash position to redeploy when the equity action call improved. This occurred at the end of April. If you recall, there was still a lot of volatility during this time and a heightened level of uncertainty. Nonetheless, the indicator showed that fund flows were moving towards equities, and either we added to a few existing holdings or added new positions in the baskets. This turned out to be a very good call as we saw the markets continue to firm up throughout the balance of the year. I should add that the equity action call is not meant as a short-term trading indicator. We don't want to trade every swing or try to. There will be periodic sell-offs in the markets, but we want to be fully invested for the medium, long-term trends that provide healthy returns for investors.
Great, thanks for that, Zach. I guess as a follow-up, maybe a fun question, do you ever fall in love with a company?
We try not to. Having an independent research screen has helped us to avoid these biases. It's one of the toughest challenges for any investor. As soon as you own a stock, your perspective changes. As we know, the stock doesn't know what price you paid for it and whether you have a gain or a loss. It can be easy to be seduced by a dividend stock that is defensive or a growth company with a compelling story. And the longer the period of time holding a stock, the greater the challenge. But I think we've done a pretty good job over time sticking with our winners and selling positions when the outlook has changed. We'll still make our investment mistakes, but we'll make the best decision at the time with the information we have, with the goal of ensuring our losses stay relatively small and don't impact the overall portfolio much. And we've also shown that once we sell a stock, that doesn't mean we cannot buy that company or stock back even at higher prices if the outlook has improved.
Okay, great. Jaden, back to you. How has performance compared in the all-cap basket to the Canadian benchmark that it follows?
Well, Joe, we started using SIA charts, which is our relative strength screening tool, in the fall of 2013, and we launched the all-cap growth basket around that time as well. Now, since inception, the all-cap basket has returned an average annual return of 15.3% versus the TSX Total Return Index of 7.6%. And the TSX Total Return Index is our benchmark, which includes the price performance of the TSX plus the dividends as well. So looking at the all-cap basket relative to the TSX Total Return Index, we're adding almost 8% per year in growth since inception. So we're very pleased with that number.
And Zach, one final question here. While managing this basket, have you seen anything that has surprised you? Or is there any company that you'd like to highlight and tell our viewers about right now?
A few things have surprised me. The first is that the market leaders will go much higher than anyone expects. For example, Boyd Group Services was $27 in 2013 and now trades at $230 a share. We have watched this company grow from a sub $1 billion market cap to a near $5 billion market cap that is now the second largest auto collision and repair company in the United States. Constellation Software was around $190 when we first purchased the shares in the all-cap growth basket. It now trades around $1,600 with a $35 billion market cap and is in the process of spinning off one of their subdivisions. While Shopify gets a lot of media attention, and deservedly so, Constellation has provided terrific shareholder returns in becoming a global vertical market software business. There are a number of other examples where companies have exceeded analyst target prices by many multiples. That's what great companies do, and it takes patience to see that performance through and not sell a good company just because of a profit. The market leaders will continue to excel in their respective industries. Lastly, I would add that Canada has a lot of great companies that fly under the radar that don't get the media attention that they deserve. But I think these companies are just focused on growing their businesses, ignoring the day-to-day noise, and looking after their employees and providing strong long-term shareholder returns, which is what we're after with our holdings.
Well, thanks, guys. I would just, once again, like to congratulate the whole team for our award for top basket in the firm. This is something we're really proud of and very honored to be awarded. And as I mentioned at the beginning of the video here, if you have any questions or comments, please feel free to reach out to a member of the team. We'd be more than happy to chat with you. So with that, thank you very much and have a great day.